Welcome back. Closing trades is what you're watching, and we're obviously discussing markets. Let's quickly go across. We have Deepak Shenoy joining us, CEO at Capital Mind Mutual Fund. Deepak, good afternoon. Good having you. Where do you currently see at this juncture? How are you seeing markets? Give us a sense, and what are the pockets of opportunity that you're looking at?
Yeah, thanks so much. Yeah, I think the problem with the markets have been like they've been lackluster for about a year, and typically, you've seen 1 to 2 years of markets being miserable before they kind of turn around, and this has not even been a miserable market in the sense of 5, 6, 7% returns overall on the Nifty, negative returns on more mid caps and small caps substantially in the last 1 year. And even now, I think it's looking like one day up and one day down, nothing major that's coming in. Some of this has happened, I think, in a phase where India's price to earnings ratios have been relatively very high. So we've got some kind of correction on that naturally because earnings go up, the price remains the same, the price to earnings ratio reduces somewhat. To a certain extent, I think there needs to be a trigger on the upside for earnings. Some of those triggers which have come in, we've been waiting for. One was the rate cut, and that's come. That's a good thing. I think rates coming down will be important to push capex back into the economy and therefore impact corporate earnings as well going forward. But the other one is also the US trade deal or anything happening on that front. Now, there's been some good news. I think exports have finally come back after a long time in November, data which came out today. But again, it's early days. We have to see whether this sustains, whether there are more impacts of anything else that's coming around, and so on. So over time, I feel this market will kind of find its space and then break out to new highs. Till then, I think the focus, in my view, is still India-facing companies, companies that sell to India and make in India. Those are ones that I think you should be focusing on, whether it is consumer companies, manufacturing companies, companies in the infrastructure space, or any other kind of entity. The idea is the market is India, and the production or the source of the products is also India.
Okay. And Deepak, hi, good afternoon. The one sector that is catching some steam today is the nifty FMCG space, the core staple names. Britannia is up 2.25%, Marico, HUL both up 1.5%, Godrej Consumer, Tata Consumer both up about 1% each. It's looking good for the staples right now. Deepak, do you believe that now that the market is trying to find some strength in trying to hold above that 26,000 mark, and with everything that we've seen in terms of reforms, staples, they now stand to gain given commodity costs are also off highs?
No, I think it's the other way around. I think
Okay.
the very boring companies priced at too high a valuation. So maybe 1 day or 2 days they'll go up. But by and large, their P ratio should come down substantially from the 50, 60, 70x you're seeing right now to a 30x maybe or 25x, where you can justify a 10% earnings growth with a 30% or 40% ROE. I would not pay substantially more for these businesses on a fundamental basis. Of course, somebody who's working on more technical parameters might be interesting. But some of these companies grow extremely slowly, 10 to 12%. After all, how much more toothpaste will you sell when almost everybody is already using toothpaste, and growth rates of population are about 2% or less than that. And pricing will give you inflation is not allowed meaningfully because input inflation is also very low. So I would say most of these companies don't have pricing power. They are going to grow at maybe high single digits, maybe low double digits. So therefore, their P's need to come back substantially. While staples are interesting, you would want the less expensive staples companies which are demonstrating growth. There are some niche companies in the space. Those might be more interesting than the large ones that are broad-based and not growing so fast.
Deepak, on India manufacturing, how are you playing that? And how are you looking at EMS in particular within that basket?
The EMS is big. I think really if you're a fundamental player in this market, you would want to have positions in them. They have had some setbacks recently in terms of price corrections, in terms of some cases, questions around accounting or governance and so on. But I think many of these companies will, if you have to shine out, you have to fix the problems that you see. Sometimes it's because of inexperience. If it's because of malice, your company will die. But if it's because of inexperience or at some level, maybe incompetence, you can fix that. Over a period of time, a lot of these small things will go away. What we're going to see is a substantially higher growth in every part of electronic manufacturing, whether it is at the PCB level, fab level, somewhere in between. All of that stuff, I think there's a tremendous amount of growth that Indian EMS companies will face, primarily because of the Indian market. I'm not even saying sell abroad. I'm just saying the domestic market itself needs a lot more chips to be manufactured in India. And given that external capacities are relatively close to us and they are going towards the higher end of everything, some of the lower end manufacturing needs which India has to be sorted out by the EMS manufacturing in India itself. And I think that will grow. I mean, it's really small right now in comparison with world markets. And even if we grow 10x of here, we will still be minuscule part of the world market. So I think that way there's a lot of growth that's in that ecosystem. But in the area of manufacturing overall, there's a lot more. There's defense, which is uh, almost by strategic nature has to be domestic to a large extent. A lot more things happening in drones, in technology around that, in the manufacturing setups. A lot more things are happening around in materials and in actual physical devices, in physical equipment as well. High precision engineering, all of this stuff is actually growing, in the sidelines because it's slowly kind of, catching up to where mainstream is. And at some point when capex comes back, a lot more of that capex is going to be directed towards Indian manufacturing companies, where mostly we don't have a meaningful presence right now, but I think that's going to change dramatically going forward. Some places I'm excited about, but there's not much listed companies in. It's still things around automation and robotics. There is some in public companies in automation perhaps, but not so much in robotics and some of the other spaces. EV I think is another huge place for manufacturing and vehicles in general. And I feel that going forward, manufacturing process automation will also be a tremendous growth story for India. We've been labor intensive on manufacturing, but I think at some point we need to increase automation. It may not be great for labor, but I think having 100 companies doing automated factories is better than having zero companies which can't afford to hire the labor.
Very interesting take coming over there, Deepak. So that's the take coming in on manufacturing. On that note, we'll slip into a very short break. But as we do